Hello, welcome again. So based on our previous conceptual discussions, let's start. How can you prepare different operational budgets for a business organization? So, and also we have mentioned that the master budgets are the component of master budgets are interrelated with each other, and the sales budget is the starting point of preparing different master budgets. So we have to start with sales budget. And how can we prepare sales budget? We have to survey the market, estimate based on which we can estimate our sales for a particular period. It may be for a month, it may be for a quarter, it may be for a year. So let's start. How can you prepare a sales budget? It's very simple, easy way. That is, you have to estimate the sales quantity. All right. So you have to estimate the sales quantity based on the market study. Then just multiply the sales quantity with the sales price. Okay, so number of units you are expecting to sell and multiplied by the sales price per unit. So in this given uh, context, so this sales budget is prepared for a quarter, a second quarter, so April, May, and June, and the total for the quarter. So 20,000 and 50,000 and 30,000, so altogether 100,000. And if you multiply by sales price, so you'll get the sales quantity. All right. So based on the following information, we can prepare the cash budget or cash collections. So what it says, 70% of the sales in the month of is being collected in the month of sale. So if you sell 200,000 in April, 70% will be collected in April. 25% is being collected or is collected in the month following sales. So 25% of these April sales will be collected in May, and 5% is uncollectible. So 70 and 25 is 95, and remaining 5% is bad debt or uncollectibles. Yep, and account receivable balance on 31st of March is given 30,000. Okay, so expected cash collections. So we can calculate expected cash collections for the quarter. So account receivable on 31st of March, that would be collected obviously in the next month. Okay, so as the collection schedule or the expectation says 70% in the month of sale and 25% in the next month. So your collection, the sales of 1 month is being collected in 2 months, in the current month and the following month. Okay, so if you have due anything outstanding in the current month, that will be collected obviously in the next month, and a certain amount would be uncollectible. So if you have anything in March, uncollectible in March, so that will be collected in April. So 30,000 is being collected in April, and the total is 30,000. And the sales of April was 100,000, so 70% of 200,000. 200,000 was the sale, 70% is 140,000 will be collected in the next month, in the month of April, and 25% will be collected in the following month. Okay, and 5% we don't need to consider in case of cash collection or cash budget. Okay, that would be considered in income statement as expense or loss. So 40,000, 140,000, and 50,000. And May sales was, how much was the sales in May? 500,000. In June, 300,000. So similarly, we can record here 70% of May sales would be collected in May, and 25% of May sales would be collected in June. And from June's sale, 70% would be collected in June in the respective month, and remaining 25% would be collected in July. So we are not considering the collection of July in this schedule. So we are considering only what the amount would be collected in April, May, and June, and the total of the quota. So we are not considering the remaining part, okay, that will be considered for the month of July. So these are the expected cash collections. All right, so this is how we can prepare cash budget. These are the figures that we can use in cash budget. Production budget. So how can we prepare production budget? So production is actually how much product we need to produce. How much production? So production actually depends on sales and also the amount of opening and closing stock that the company wants to maintain. All right. So opening stock is already available, but how much, and also how much we want to expect to maintain at the end of the period. All right. So for example, we have to, in this example, required ending inventory is 20% of the following month's sale. So what we want to sell in the following month, 20% we will maintain as ending inventory. So in case of July, sales unit in July, so budget is 25,000 is given. So we will need this one, July sales, for considering ending inventory of June. So this is given in the question. So sales, as we expected, sales 20, 50, and 30,000 in these months. Okay. So yeah, let's start. So the sales budget, this is what the sales expected sales units, total 100,000. So plus closing stock. We have to produce if you want to maintain something in the closing stock as well. So closing stock plus sales, that is the total amount available or we need, and opening stock that is already available that we don't need to produce. So if you deduct opening stock, that means the remaining amount we need to produce. All right. So add desired ending inventory. So ending inventory, according to the given information, 20% of following month sales. So what is the following month sales? For April, following month is May. So May sales is 50,000. So 50,000 multiplied by 20%. So 10,000 is the ending inventory of April, or closing inventory of April. And for May, next month is June. June sales is 30,000. So 30,000 times 20% is 6,000. 6,000 ending inventory of May. And for July, sales is given 25,000. For June, ending inventory depends on the month of July. So 20% of 25,000 is 5,000. All right. And what's the ending of the quota? Okay, when the quota ends actually. So quota actually starts from 1st of April and end in 30th of June. Okay, so when quota ends, that is the ending inventory of the quota. Okay, so quota is ending on 30th June. So 30th June ending inventory is 5,000. So 5,000 is the ending inventory of the quota. We should not add all these for ending inventory of the quota, because ending of the April is not the ending of May. Ending of April is actually the beginning inventory of May. So we should not consider all these inventory as ending inventory of the quota. So when quota ends is the 30th of June. So 5,000 is the inventory amounts on 30th of June. So that is the ending inventory of the quota. So if we add this together, we can find out what's the total needs. What actually total need for the organization, and then if we deduct the beginning inventory, opening stock, opening inventory, then we can find out how much we actually need to produce. Okay, so we need 30,000. Okay, in the month of April, right? This is for sales and this is for ending inventory. This is the total needs, but we already have 4,000 in our hands at the beginning of the quota. This came from the last month, okay, previous month, this month of March. So if we deduct 4,000, then we'll get what we'll get, the amounts that we need to produce. Okay, so now what's the amount of opening stock, opening inventory. All right, so opening inventory is, so as I mentioned before, okay, is there anywhere it says April and opening is 4,000. Is anything somewhere given? If not, we have to assume that 4,000 is given for April, okay? So no, this probably is not given here, but somewhere. So 4,000 is considered as the opening of April, and April ending is the beginning of May, and May ending is the beginning of June. All right, and for the quota, as I mentioned before, so quota starts on 1st of April. Okay, when April starts, quota also start on that day. So what's the beginning of the quota? Is when the April starts. So 4,000 is the April start and 4,000 is the quota starts, because the same day quarter starts when the April starts. So this is how we should find our production or prepare the production budget. Come to the next one, direct material budget or purchase budget, you can say. So how can you determine purchase amount? So how much we need to purchase? We need to purchase for production, and also we need to purchase something if we need to maintain at the end of the month, okay, as a closing stock. But we don't need to purchase if we have something in the beginning inventory. So beginning one we should deduct. So what's the total needs? Total need actually raw material for production, and also if we want to maintain something at the end of the period. So this is what total is, the total needs. Minus, we don't need to purchase opening, so deduct this one, and then we will get how much we need to purchase. Okay, and in case of closing inventory, how the ending inventory of material is determined, that is 10% of the following month's production. So what the raw material we need for production in the next month, 10% of which we need to maintain as ending inventory. This is what it says. So next month's production needs is the ending inventory requirements in the previous month. So we want to make sure the 10% of the product raw material what we need, we will require in the next month, we already have, we should have available 10% in the month before. In case of July's expected production, 23,000 units, right, is given, right, is being provided, and 5 kilograms of materials. So units this and 5 kilogram of materials at and the price is given per kilogram 40p are required per unit. Okay, so for 1 unit 5 kilograms and each kilogram of material is 40p. Okay, 0.40 pound. On 31st of March, 13,000 kilograms is available. Opening stock is given, and this is what something we should be given here as well for 4,000. Okay, somewhere maybe I missed this one. Yeah. So April, what's the production need? We have to find out what these are the production amount that we have already calculated. This is 26, 46, and 29, 101,000 for the quota. Okay, and 5 kilograms of material we need for 1 unit. So if we multiply 5 kilograms with this number of units, then we'll get how much or kilograms of materials we need for production in April, in May, and June, and for the quota in total. And then find out how much ending inventory we want to maintain. As the question says, 10% of the following month's production needs. So in April, 10% of the production in the following month, in April, ending inventory would be 10% of the raw materials need for production in the following month. Okay, so following month's production requirements, production needs, raw material requirements for production is 230,000 times 10%. So that is 23,000. And the same thing here, 145,000 times 10% is 14,500. And in the next month, that is in July, is given here. 23,000 times 5 multiplied by 10% is 11,500 kilograms. That's the ending inventory we need. And as like as the previous one, so 11,500 is the ending inventory of the quota, because quota ends when June ends. All right, and then we have to add these two figures, production need plus ending inventory. So this is the total requirements. So how much we need to purchase? Do we need to purchase this? No, because we already have 13,000 given in the question. 13,000. This is the end of March amount. Ending inventory of March means beginning inventory of April. So 13,000 kilograms already we have. So how much we need to purchase? The remaining amount, 140,000 that we need to purchase. So, and the same thing, this is the ending inventory of April. That means the beginning inventory of, this is the same amount, beginning inventory of the next month. Okay, and 14,500 is the ending of May. That means this is the amount what would be beginning of June. All right, and for the quota, when the quota starts, 1st of April. Was the beginning inventory of April, that would be the beginning inventory of the quota. Okay, and then we will find out the material that we need to purchase. All right, and the price is given 40p per kilograms. If we multiply the purchase amounts by purchase price per unit, then we will get the amounts of pound, amount in pounds that I need to pay for purchase. All right. So expected cash disbursement according to the question, if the question says if the question says 1/2 of a month's purchases are paid for the month of purchase. So half is being paid in the month we purchase, and the half is being paid in the following month. All right. So 31st of March, what's the amount remaining that we need to pay from the month of March? So we have to pay in April. That is 12,000 given. So from the month of March, 12,000 we are paying in April, the disbursement in April. Then what's the purchase of April? 56. So half of 56 we will pay in April and half will pay in May. And 88,400 is the purchase of May, and half will be paid in May and half will be paid in June. And 56,800, half will be paid in June and half will be paid in July. So this is how 50% in May, 50% in June, and 56,000, half of 56,000 in April and half of 56,000 in May. And then we'll find out the total disbursement, payment for purchase. All right, it's very simple, easy. Direct labor budget. So for production, you need labor. So the labor budget will depend on, or labor budget should be prepared based on production units. Okay, number of units produced, not the number of units sold, or not based on purchase. So each unit requires 0.05 hours of direct labor, person says, and the company has a no layoff policy. So all employees will be paid for 40 hours of work each week. Okay. In exchange for the no layoff policy, workers agreed to a wage rate of £10 per hour, regardless of the hours worked. There is no overtime pay. All right. For the next 3 months, the direct labor workforce will be paid for a minimum of 1,500 hours per month. Okay. So how much labor actually we need? So this is the guaranteed payment that we have to pay. All right. So how much actually we need? So according to the needs of labor, this is the amount of labor we need for 1 unit of product. So production is here based on the production budget. We have calculated this 26,000. So if you produce 26,000, then so for 1 unit, you need 0.05 hours. If you multiply these, then you will get labor hours required. So 1,300 hours of labor time need in April, 2,300 in May, and 1,450 in June. So if you add all these together or multiply this, you will get 5,050 hours of labor requirements in the month of, in this quota. Okay. Guaranteed labor hours, that is guaranteed to the employees is 1,500. This is what we have to pay. And then what we can see, we can see that we have to pay, though we need 1,300, but we have to pay for 1,500. So this is what we have to pay. In this case, we have to pay additional. So though we guaranteed this, but actually we are using this, so we have to pay for this one. And in this case, this is less than 1,500, but we have to, and that's why we have to pay the guaranteed amount. Okay, so total is 5,300 hours we have to pay for, and then multiplied by 10 power per hour. All right, so and then you'll get the direct labor budget. All right, and manufacturing overhead budget, right? So manufacturing overhead budget condition given here, variable manufacturing overhead rate or 1 per unit. And obviously manufacturing overhead, it depends on number of units you produced. Okay, so fixed manufacturing overhead is 50,000 per month. For monthly fixed overhead is 50,000, and it includes 20,000 of non-cash, that is depreciation of the plants. For depreciation, we do not need to pay anything. This is cost, but this is not a cash expense. We don't need to pay for this. All right, so what about the variable manufacturing overhead? Depend on number of units produced. So what's the production? Production units are here, multiplied by rate, 1 pound. So variable manufacturing overhead is this, and fixed overhead 50,000, 50,000, 50,000, 50, so 150,000 for the quarter. And then total manufacturing overhead 26 and 50, so 76,000, 96,000, 79,000. So altogether this, but less depreciation, right? We will need this for our income statement, but for cash budget we need this figure, and that's why we are calculating this. So 20,000, 20,000, 20,000 is the depreciation every month. This is what we don't need to pay in cash. So if we deduct this, this is what cash amount we need for manufacturing overhead. Cash disbursement regarding manufacturing overhead would be this. Okay. And selling and administrative overhead is the same way, but obviously we'll prepare in the same way, but the basis of sales and administration overhead should be sales amount. All right. So the condition given here, variable selling and administrative expense is 0.5, that is 50p per unit. Okay, and fixed selling and administrative overhead is 70,000 per month, which includes 10,000 depreciation. So in case of selling and administrative overhead, we should consider sales amount, sales quantity as the basis of preparation of the budget. Okay, so the sales quantities are here from the very beginning budget that we prepared, sales quantity, and multiplied by 50p, then we will get variable sales and administrative expenses, and then 70,000 is the per month fixed selling and administrative expense. Add this, and then you will get the total amount of selling and administrative expense or overhead, and deduct the non-cash, that is depreciation. And then we will get the amount that we require to pay for selling and administrative expense. Okay, so this is what the total amount that we need to consider as expense, as the expense for the organization that we need to put in the income statement. But for cash budget, we need these figures. All right, as the previous one. So now cash budget, right? For cash budget, as we said, cash budget. So beginning cash balance, obviously the beginning amount of April should be given, right? And beginning of May would be ending of April. Okay, ending balance of April would be the beginning balance of May. All right, and ending balance of May would be the beginning balance of June, and that's all. This is how we have to consider. So this is how beginning balance will come, and then cash collection. This is what we have calculated. Cash collections in here, expected cash disbursement, cash collections 170,000, 400,000, 335,000, and total 905,000. Okay, so this is the collection, and these are the disbursement for material for purchase. Okay, so 40,000, 72,000, and 300, 72,700, 185,000. All right. So yeah, this is the cash collection and beginning balance. If you add this, then you will get. And obviously, the beginning balance we should not write in the beginning. Okay, only write beginning this one, and then calculate all these, and then you will put May beginning balance, and then finish this one. But remaining figures, that these remaining figures you can put, not the beginning. All the beginning you will not get at the beginning. Yeah. So cash collections, right? You have to add, so cash beginning balance plus collection, you'll get available for use, or available cash minus cash payments. All right. So payment for material purchase, payment for labor, payment for manufacturing overhead, selling and administrative overhead. Obviously the cash amounts only, right? As I mentioned before, only the cash, not the depreciation. And if it says the equipment purchase, right, and dividend paid in this month, so add all these payments, so then total disbursement you will get, and 210,000 minus 230,000, and 20,000 is the excess of what's called the excess or deficiency of cash available over disbursement. All right, then if you have any option for getting some loan or something else, then say if you get 50,000 loan, if you get 50,000 loan, then you will have a balance at the end 30,000, and this 30,000 is the ending balance of April and beginning balance of May. Okay, and then go and add this one with, right, collection, and then 430,000, and all disbursement deduct, and then 400,000 deducted from 430,000, and then you will get 30,000 as the ending balance. Put this one here is the beginning balance of June, add with collection, and then 365,000, right, and deduct all the disbursement 270,000 from here, and then you will get 95,000 as your ending balance. So as before, what's the beginning balance of the quarter? That means when the April start, quarter starts. So the beginning of April is the beginning of the quarter. And similarly, and then if you deduct the 50,000 that you borrowed from here, right? This is what is stated: 50,000 deducted from here, okay, that you borrowed for 2 months. So and then 45,000 remaining ending balance of June. All right. So and ending balance of the quarter is also 45,000. All right. This is the cash budget. Yeah. So this is what I told you: borrowing 50,000, and then payment 50,000, and also interest payment 2,000 that you need to pay for the quarter as well. So if you deduct it, so 52,000 is regarding financing. Okay, so 50,000 here, and you are paying interest and the principal amount in the month of June. So 52,000, and then 43,000 remaining, and here 43,000 remaining as the ending balance of the quarter. So these two endings should be, because ending of June is the ending of the quarter, so these two figures should be the same. All right. And budgeted profit statement or budgeted income statement, right? So budgeted production cost per unit, if it is given, say, material cost, labor cost, overhead cost, production cost per unit is 4.99. Yeah. So budgeted income statement, sales is 10, there is 1 million, 10,000 or 1 million. Cost of goods, sold, okay, how many units you sold is 100,000 multiplied by this. So this is what's the cost, and if you deduct it, then you'll get gross profit, sales and administrative expense. Okay, so if you deduct 260,000 sales and administrative expense, we have prepared 260,000 total sales and administrative expense, and deduct interest expense. All right. This is for the net profit 239,000. And budget balance sheet, budgeted balance sheet. So all the assets and liabilities, assets and liability, current assets and fixed assets and liabilities. So all these are expected, right? So the cash amount, cash balance at the end, right? Debtors, that is the receivable amount, 75,000. This is from sales budget, right? The remaining collection, raw material stock, 4,600, finished goods stock, 24,950. So these are the current assets. Property, plant, land, building, equipment. So these are given, yeah. And creditors, this is from the purchase budget, remaining purchase amount 6,800, and half of which we have to pay in the next month. Common stock should be given in the question, and retained earnings should be given in the question. And retained earnings also includes the profit that we have calculated, here. So all the details will be given, but you have to put all these here, and these are expected. This is what we expected in the um, as the assets and liabilities at the end of the period. Okay. Yeah, and obviously, finally, budget is important for the organization. Budget required for serving different purposes, for coordination, for control, for achieving the strategic objectives of the organization. But obviously, it has some limitations as well. So, one of the limitations, the first limitation is budget drive dysfunctional or stupid behavior, right? Dysfunctional behavior. So how it works? So is that mean budget? We set budget at the beginning of the period, considering some context. But if suddenly context change, but as we planned, as we budgeted, sometime we don't like to consider the changed situation. So in the middle of the year, say in June or July, suddenly the context of the organization changed, right? But if we say, oh no, we have budgeted these, we have to do it, right? Our ability reduced. Or for example, suddenly COVID-19 started. What we can do? Can we say we budgeted, we should continue, we have to continue our production? No, we can't. We can't do that. So according to budget says you have to continue your production. Budget says you have to do your job, but because of coronavirus, we may have to stop. But budget doesn't allow that. Budget says no, work. We have to work. We have to go. Number two is time consuming. Obviously, preparation of budget is time consuming, right? So it's another limitation. But though it is time consuming, but it is beneficial. We need budget, but it sometimes requires lots of time, right? And particularly if you prepare zero-based budget, it requires more time even. And obviously, if it is expensive and lots of employees are supposed to spend hours and hours, days and months for preparation of the budgets, so it's expensive. And particularly if it is a small enterprises, it is expensive, even more expensive for those enterprises. And number four, out of touch with the needs of managers. Okay, out of touch with the needs of managers. So sometimes budget is given, the managers or the supervisors are out of touch. They are not. We can't find them, right? So budget is our managers in that case. Fixed target and financial incentives, right? So it provided some kind of fixed target, right? But it doesn't, in some cases or most of the cases, it doesn't consider the changed situation, right? And focus of central command and control, right? Particularly in case of preparation of the budget. And mostly budget is prepared by the top management. Budget is prepared by the high officials. So it's a kind of the thinking of the top management, thinking budget is being considered or used as a tool of control by the top management, right? So a specific target is given, and then top management wants to control lower level management based on budget, right? So yeah, that's all. Thank you very much, and hope all these discussions will help you to understand preparation of budgets. And if you have any question, you can contact me. You can contact your tutor, and you can ask question in the seminar sessions. And please practice this type of question, because these are important questions for your final written exam. Thank you very much for watching. Hope all the best for you. Stay safe and stay fine. Thank you very much.